Fears of an all-out global trade war and a recession at home as President Trump's reciprocal tariffs disrupt international markets and lawmakers scramble to fight back.
It was yet another volatile day of trading on Wall Street, with stocks plunging, then surging throughout the day. In the end, the Dow closing nearly 350 points lower, the S&P dropping by 11 points. However, the Nasdaq closed 15 points higher. But the White House is not backing down. In fact, President Trump is ramping up the rhetoric against critics of his plan and tripling down on his agenda, saying just this afternoon that the tariffs could be permanent. Market turmoil and worldwide uncertainty loom as a universal 10% tariff on all imports into the U.S. is now in effect, and additional tariffs on products from dozens of countries start Wednesday. Monday morning, President Trump threatened to hit China with an additional 50% tariff on its goods if Beijing does not withdraw its reciprocal tariff of 34% by Tuesday night.
We're going to get fair deals and good deals with every country, and if we don't, we're going to have nothing to do with them. They're not going to be allowed to participate in the United States.
Wall Street opened in bear market territory Monday as global markets melted down and lawmakers implored the president to reconsider his plan.
I urge the president to back off before it's too late. The damage you've already done is huge, but stop now or it's going to get even worse.
Senator Chuck Schumer says the tariffs will likely plunge New York into a recession as the state trades more than $200 billion worth of goods annually. Stocks swung wildly throughout trading Monday as Goldman Sachs said the tariffs, quote, greatly increase the likelihood of a recession. And J.P. Morgan CEO Jamie Dimon told his shareholders, quote, we face the most perilous and complicated geopolitical and economic environment since World War II.
The tariffs that President Trump has put in place, these will all be paid by U.S. consumers. The idea that foreign countries pay these taxes to the United States is nonsense.
But the president continues to double down, posting Monday, quote, don't be weak, don't be stupid, don't be a panican, a term the president said represented a new party based on weak and stupid people. Now lawmakers from both sides are trying to reassert their authority over the power to impose tariffs. Last week, the Senate passed a resolution to stop the tariffs on Canada. And today, Republican Congressman Don Bacon plans to introduce a bill in the House that would also rein in Trump's tariff powers.
Let's have a vote in the House so that people will know who stands for what. So therefore, when they go back to the polls, they will know who to vote for what, who really wants to work with the working class of individuals, making a difference for average, everyday Americans, and who's only caring about the ultra-rich.
As for the House bill, Speaker Mike Johnson would have to allow the bill to be put on the floor for a vote, something that is unlikely to happen.
The uncertainty in the markets certainly has investors and everyday Americans wondering what, if anything, they should do with their money as this trade war plays out.
Joining us now is Catherine George, Senior Advisor of WealthStream Advisors Incorporated. Catherine, thanks so much for your time. Let's start with this. Is this volatility unprecedented? And what does history tell us about when and how the market will recover?
So it's a great question. I mean, history will go back and tell us that there's different reasons for market declines, but the numbers show the same. It's that the declines are frequent. If we look at a decline of about 15%, it happens about once every 3 years. So this is normal. And even when we think about what people have been saying about the U.S. stock market, clients and investors have been saying that the U.S. stock market is overpriced, it's overvalued. So regardless of what's happening politically, people were anticipating that something needed to change in the stock market. So when we think about that, it's really just part of the cyclical nature of stocks.
I'd like to know, in particular, for those that might be looking to retire soon. We're always told not to touch our 401ks, but how are things looking now for those folks that are in that category?
So with 401ks, you're not required to pull money out until 73-ish. So, there's still, even if you retire before that, you don't have to pull it out.
But what if you need it?
Yeah, exactly. So for those people who need cash, there's a couple of different options. If you have money outside of that 401k, you could touch bonds first. I'd say bonds are the #1 piece. That's the safest sliver to pull from now. But you could also borrow. If you don't want to sell stocks, you could borrow either from your non-retirement accounts. You could borrow from the 401k. I'd say that's the least desirable option, but everyone's situation is different. And then I'd say kind of that last option is selling stocks. No one wants to sell stocks when they have hit this low point, and it could even go further. But I would say that those other options are the first bet.
And what about the all-important interest rate? The president said the Fed needs to cut it. How likely do you see that being?
Yeah, of course, nobody knows, and there's some conflicting messages going on. If the tariffs increase prices and inflation goes up, it's unlikely that the Fed will make that change. Of course, they've said that they're going to wait and see, but we'll have to wait and see with them.
All right, Catherine George, thank you so much for the advice.